Hey everybody, and welcome back to the Unbelievable Simple Passive Income Strategy. And you're learning the stock market game. And I just want to thank you for making it this far in the course, because hey, let's just be honest. This is multiple videos, courses, and you're serious about trying to learn the strategy, or at least have the information and to assimilate if you want to use it or not in whatever your investing game is. So in this video, I'm going to be talking about trading with insurance. And this is something that if you're a novice investor that a lot of people do not do, but you always want to make a trade with some insurance. And so let me just go into what I'm talking about what I mean by having some insurance. So, right, you want to be placing what we call a trailing stop, right? And what this is a type of trade that you place that doesn't cost any money, but you do have to tell the system to actually have it in the system and actually place it. Because what it does is it protects your principal, right, and your profits, right? So, for example, let's say you're in a position of a stock, right? And we've been using Wells Fargo. So let's say you're in the position of Wells Fargo. And then one day the stock market just takes a dive, right? But because you inputted that trailing stop into the system, if the stock drops between 7 and 10%, right, it'll automatically sell it for you, and you'll be in the cash, right? You just tell it how many of your shares you want to sell, and at what percentage. And then because it's a trailing stop, what that means is as your stock price goes up, so does the trailing stop. It always follows the stock up, right? Because there's some stops that you'll say, hey, I want you to sell it if it ever drops to this price. You just automatically sell it, right? But instead of doing that, we still want to have our profits, right? So it'll just follow the stock up. And once again, this is something that you have to enter manually, right? So let me show you how to actually do it. This is in the brokerage account, so I don't know which brokerage firm you're using. Once again, like I said, I recommend TD Ameritrade or Options Express, just because um, they have they allow you to do paper trading. But if you don't have that, it's going to be something similar as well. So let's just find that. So, oops. So this is a TD Ameritrade account, and if you have TD Ameritrade, you'll notice you'll have something like this. So down here at the bottom, and we're going to use Wells Fargo. So we'll go ahead, and if we were going to buy Wells Fargo, um, we'll just go over that real quick. So I don't have any Wells Fargo stock. I want to buy it. You'll enter how many shares you want to buy. Let's just say it's 5 shares for some reason, right? You'll enter the stock price, or the stock symbol. And if I'm gonna buy it, right, what I normally do and what I recommend is you can just do a market order, right? You just want to get in you want to get purchase a stock right away. And what a market order is you're gonna buy at whatever the price is trading at right then and there, right? They also have what's called limit orders, and let's say the price is at $100, right? I'm just being completely hypothetical here, right? You'll say, well, I think it's going to drop to about $99, right? So you'll place the order with initially the stock trading at $100, but if it drops, whenever it drops to $99, that's when your order will actually get executed. So that's once again, I just say go ahead and place it at the market price just so you make sure you get in your position, because this is something that you're doing passively. You're not a day trader, right? You just want to buy the stock and then understand, hey, right, and check it every day with the technical indicators. So once we buy the stock, right, we have the stock now. We have our 5 shares. The next thing we're gonna do is we're gonna go and we're gonna take the action. We're gonna do a sale, right? We're gonna sell however many quantities of the stock or shares that we have of the stock. We'll put that 5 in there, right? And then same the stock, right? The stock symbol. And then for order type, we're gonna do trailing stop, and we want to use the percentage one. And now for me, the percentage should be between 7 and 10%, right? Obviously, it's 7 is going to have less loss than 10%, right? But then the thing here too is that it could just take a little dip, right? And then it could go shooting back up. And we don't want to have it so close that it sells our position when it only takes a slight dip. All right. So use 7 to 10%. I mean, you can even go higher if you want, right? Just depending on what your tolerance is, right? So let's just say 10%, right? You'll put 10 in there, and then you'll push, right? You'll pick you just pick day, and then if you come over here, it'll have like review order, and then you'll execute depending on wherever you're at and whatever brokerage account that you're using. So that's what you want to do. That's a trailing stop, a percentage trailing stop, and you always want to do this because you want to have insurance on your money. You do not just want it to be out there in the market. So even when we're winning, hey, things are great. But even if we're not watching this, right, we know there's only a certain amount that we're going to lose, and then hey, we're back in the game, and then we're on to our next investment. So, with that being said, if you want to learn more about this in great depth, hey, you can always Google it, right? But once again, I'm just telling you what you should do using this strategy, and then you can also read the book. This is from Rule Number One Investing by Phil Town. So you can read it there as well if you want to get a more in-depth explanation of what I'm trying to tell you. So thank you for your time. Click the link below somewhere on this video, and it's going to show you, which is going to be the last video, and we're going to talk about in that last video just simply about pulling the trigger and paper trading and how to do that for yourself. So thank you for your time, and I'll see you in the next video.